Have you ever wondered how money, something we use daily, came to be? To answer that, let's journey back in time to the earliest days of human trade. Back then, there was no money. Instead, we had the barter system, a direct trade of goods and services, but it had its drawbacks. What if you had a cow but needed a sack of grain? You'd have to find someone who not only had grain, but also wanted a cow. A bit of a hassle, right? That's when humans got creative and started using items like shells and beads as a medium of exchange. These items were universally desirable, easily portable, and could be divided into smaller units. But even then, a need arose for a standardized form of currency that was durable, easily divisible, and widely accepted. And so the evolution of money began, from shells and beads to something more universally accepted. But how did we move from shells and beads to coins and paper money? Well, it's a fascinating tale that takes us on a journey through ancient civilizations and across vast continents. But first, please show your support by hitting the like and subscribe buttons down below, and let me know if you'd like to see more content like this. The invention of coins is attributed to the ancient Lydians, who lived in what is now Western Turkey, around 700 BC. They started using small pieces of metal stamped with a design as a form of currency. This was a huge advancement, providing a standardized and universally accepted medium of exchange. Just think about it for a moment. Instead of carrying around a pouch full of shells or beads, you could now carry a small bag of coins. Not only was it easier and more convenient, but coins also had a standardized value, making transactions smoother and more predictable. Around the same time, the Chinese were making their own strides in the evolution of money. They introduced paper money, or banknotes, during the Tang Dynasty, around the 7th century AD. Imagine the convenience this brought. Instead of carrying around heavy coins, people could now carry lightweight paper notes. But this innovation also brought about a new challenge: trust. For these paper notes to hold value, people needed to trust the government or the issuing authority. This trust was crucial. Without it, the paper was just that, paper. So, the advent of coins and paper money marked a significant shift in the way transactions were conducted. They allowed for a more efficient exchange of goods and services, and laid the foundation for the complex financial systems we see today. But the story doesn't end there. As societies grew and economies became more complex, the need for a more sophisticated monetary system arose. This led to the birth of banking and credit systems, which we'll delve into in the next scene. Coins and paper money were a big leap forward, but the biggest changes were yet to come. So, we had coins and paper money, but how did we get to the point of not even needing to carry these around? Well, the answer lies in the birth of banking and credit. As societies grew more complex around the Middle Ages, people needed a safe place to store their wealth. Monasteries and temples, considered secure places, often served as early banks. However, as trade expanded, the need for a more developed banking system emerged. This led to the establishment of the first banks in medieval Italy. These banks would hold deposits, lend money, and even issue a kind of early check known as a bill of exchange. This bill could be given to a merchant in one city, who would then present it to the bank's branch in another city to receive their funds, without having to transport large amounts of gold or silver. Fast forward to the 20th century, and banks were on the cusp of a revolution. With the advent of technology, banking was no longer confined to physical buildings. And then came the game changer: credit and debit cards. Invented in the mid-20th century, these cards meant you could make purchases even if you didn't have the cash on hand. You were essentially borrowing money from the bank, which you would pay back later. As we moved into the 21st century, the rise of the internet and digital technology brought another seismic shift. Physical money was becoming less and less important. Instead, we started using digital transactions. You could now buy a coffee, book a flight, or pay your bills with just a click. The concept of money was transforming. It was no longer something you held in your hand. It was numbers on a screen, shifting from one account to another in a matter of seconds. Money had become abstract, a symbol of value that existed mostly in the digital realm. With the advent of credit and digital transactions, money was becoming less and less tangible. But what if we took this a step further? What if money wasn't just digital, but also decentralized? Enter the world of cryptocurrency, a revolutionary form of digital money that has the potential to change how we think about and use currency. The term cryptocurrency might sound a bit intimidating, but it's really not that complex. At its core, it's a type of digital or virtual currency that uses cryptography for security. This makes it incredibly difficult to counterfeit. Bitcoin, introduced in 2009, was the first cryptocurrency and remains the most well-known and widely used today. But what sets cryptocurrency like Bitcoin apart from traditional money? The answer is decentralization. Traditional forms of money are controlled by central authorities like banks or governments. They can regulate the supply of money, influencing its value. Cryptocurrencies, on the other hand, operate on technology called blockchain. It's a decentralized technology spread across many computers, which manage and record transactions. This means no central authority has control, making cryptocurrencies potentially immune to government interference or manipulation. So how does Bitcoin work? Bitcoin transactions are verified by network nodes through cryptography and recorded in a public distributed ledger called a blockchain. The process of verifying these transactions and adding them to the blockchain is called mining. Miners are rewarded with new bitcoins, which is how new bitcoins enter circulation. The potential advantages of Bitcoin and other cryptocurrencies are substantial. They offer the promise of lower transaction fees than traditional online payment mechanisms, and, being decentralized, they're operated by a decentralized authority. However, it's important to remember that cryptocurrencies are still relatively new and come with their own set of risks. Their value can be highly volatile, and regulatory, security, and privacy issues remain. Bitcoin and cryptocurrencies like it represent the latest evolution in the long history of money. They are not just a new form of currency, but a new way of understanding and implementing the very concept of money. The future of money might just be digital and decentralized. So, we've journeyed from barter to Bitcoin, but what does the future hold? Let's take a moment to look back on our voyage through the ages. We began with the barter system, a simple yet effective method of exchange. This was our first step towards creating a system of value. Yet it had its limitations, leading us to innovate and introduce shells, stones, and gold as a form of currency. From shells, we leapt forward to coins and paper money, tangible tokens symbolizing wealth. This was a significant evolution, making transactions more straightforward and paving the way for the concept of banking. With the advent of banking and credit, we saw greater security, convenience, and the birth of a complex financial infrastructure. Then came the digital age, revolutionizing our world and our money. Cryptocurrency, like Bitcoin, emerged, offering decentralization, enhanced security, and global accessibility. Digital wallets became commonplace, carrying our cash, cards, and even identification in one compact virtual space. But now, as we stand on the precipice of the future, we wonder, what's next? Could we see further advancements in cryptocurrency, making it even more secure and user-friendly? Perhaps the advent of digital wallets is just the beginning, and we'll witness the evolution of more comprehensive digital identities, combining financial, personal, and biometric data in one secure location. Or maybe we're headed for something entirely new, a concept we haven't even thought of yet. Could we see the rise of a global currency, eliminating exchange rates and fostering economic unity? Or perhaps the advent of AI-driven financial systems, capable of predicting market trends and offering personalized financial advice. While we can't predict the future, one thing is certain: the evolution of money is far from over. The only constant in our financial history has been change, and as technology advances, so too will our methods of exchange. We've come a long way from barter to Bitcoin, and I, for one, can't wait to see where we'll go next.